Let's get right to the floor show to tackle it all with CFRA Research Chief Investment Strategist Sam Stovall. Sam, in just the last hour and a half, let's say 1:40 p.m. Eastern Time, the U.S. Budget Director Russ Vought threatened 10,000 or more layoffs due to the government shutdown. But then in just the last half hour, this news breaking that a U.S. judge has blocked the Trump administration from laying off any workers at more than 30 agencies amid the government shutdown. Interesting to see the markets are fluttering but not diving. What do you make of it?
Hey, Liz, good to talk to you again. I think that the China situation is probably more important for investors. I like to say that bull markets don't die of old age, they die of fright. And what they're most afraid of is recession. And we earlier in the year had the worry about recession because of the U.S.-China trade dispute. And with the resurrection of that, I think that's a bigger issue. But that's being put back on the burner because earnings are coming out very strong.
Well, so would you call it unnerved by the trade situation that has flared up since last Friday, let's call it? President Trump retaliated against the Chinese, who had suddenly expanded their export controls on rare earth metals?
Yes, I would. And no, you're not leading the witness, as Perry Mason would say. That essentially investors are sort of wondering, okay, well, the market is moving higher into the year end, probably because a lot of money managers are behind their benchmarks. And so they want to continue to buy into this rally. But investors are a little bit concerned about what could happen with China, what could happen with the government shutdown, et cetera. So again, the market does seem to be climbing a wall of worry, but we're probably not out of the woods just yet.
Third quarter reporting season kicking off in a big fashion with the financials. We're going to talk later about the banks, which are our Cassidy. But in the end, as we start to really kick off this earnings season, what are you expecting? Because we saw a little bit of a shift. I think yesterday the expectation was that S&P earnings would jump about 7%, but now indicated to show a 6.4% increase. Should we read anything worrisome into that?
No, usually you see a little bit of a dip after the earnings season gets underway, and then it tends to ramp up. Yes, the banks certainly hit the ball out of the park, and financials had been expected to grow about 9%. Now that estimate is 13.5%. So just the banks themselves really added a bit of stimulus to earnings growth expectations, certainly in the financials. And as time goes on, I think it will be another time in which the actuals exceed end of quarter estimates, as they have 64 of the last 66 quarters.
I would tell you that people are watching things like rare earth metal stocks. They are on a tear, at least they have been over the past 48 hours, due to what is this tariff and trade war rearing its ugly head once again. But you're going in a different direction. You're liking healthcare at the moment. Why is that?
Well, I think investors should stick with stocks, but I think there are times when you want to rotate, move into areas that are just beginning to emerge. And because the fact that the U.S. government did strike a deal with Pfizer in order to deal with lower drug prices, sort of treating them like a most favored nation, I think that's taken a lot of pressure off of the biopharmaceuticals. So the group itself was raised from underweight to market weight, and we have some stocks and an ETF that we happen to favor.
Right. You like the biotech XBI, S&P sector spider there. And again, it's easier sometimes for investors to pick an entire basket there. That said, you like the J&J story? We had the CFO here yesterday. They look like they're kicking on all cylinders.
They are. They recently decided to separate their orthopedics group into a separate entity. We think that'll be good because it'll allow them to focus on medtech. We also upgraded our outlook on Eli Lilly to buy from hold. We think that because they're doubling down on their investment footprint in the U.S., that will certainly help them in different areas of drug therapy.
Sam, I do want to take this moment to thank you, because from the day we launched 18 years ago this week on Fox Business, you've been a friend, and we really appreciate it, especially considering you are one of the best market gurus. So thank you.
My pleasure, Liz. Happy anniversary.
Thank you so very much.